Welcome back to this Money Control live stream. You're watching Closing Bell with me, Nandita, Khemka.
And I'm Yatin, Mota.
Well, Yatin, it's raining records on Dalal Street. It's a rainy day here in Mumbai, but on Dalal Street, it's raining records given the fact that the Nifty has crossed that 19,700 mark. Sensex is up somewhere on 550 points or thereabouts. 66,600 on the index. Yatin, looks like 20,000 is just like a few days away, given the fact we are just somewhere under 300 points away from that landmark level of 20,000. But talking about today's session, I think you should have taken out your miniature bull today, Yatin. But in the absence of that, let me just take you through what is happening with the markets. Of course, as I mentioned, Nifty, Sensex at fresh record. Mid and small cap indices pretty much steady. The small cap index has gained somewhere around 1% or thereabouts. You know, if you look at the sectoral movers, Yatin, IT index was of course gaining for a third, fourth straight session, and in fact it hit a fresh 52-week high today, but it did cool off from the day's high. It's the banking pack, the Nifty Bank index, that has rallied somewhere around 600 points. In the first part of the session it was in the red. But now it has staged a very smart comeback with the likes of SBI and other private banks like HDFC Bank after steady performance in the first quarter. And of course, you have the likes of ICICI Bank, IndusInd Bank. All of these banking heavyweights are among the top Nifty gainers, and they are lending support to the index. Aside of that, if you look at the other gainers, you have the likes of Grasim, Wipro, Reliance Industries also up somewhere around 2%, Tech Mahindra, IndusInd Bank. So a lot of these banking names, and of course Reliance Industries index heavyweight also lending support to the index. On the flip side, I think autos and realty weren't doing all that well as sectoral movers. And if you have a look at the losers, you have the likes of ONGC, Hero Moto, Tata Motors, Bharti Airtel, JSW Steel among the top losers on the index. But let's talk about the mid-cap end of the markets. Quite a few movers there as well. Some of the companies reacting to their earnings.
Yeah. And Nandita, if you look at the mid-cap end of the market, SW Solar and post the earnings and conference call wherein the management charted out good order booking. That stock was up 15-16% in trade. India Bull Real Estate, after quite some time, that stock was showing strength, up 10%. And similar were the gains with PPL Pharma, Vivo Global, and Ratnamani Metals. All of these stocks are flying in trade. Obviously, one stock which did not do well is Route Mobiles. The promoters have decided to sell their stake to a MNC company. Obviously, the structure of the deal is such that probably the shareholders did not like it. Stock was down 10% post that transaction announcement. Just Dial, after a strong quarter, the earnings still was down 4%. And JSW Energy, after posting a weak set of numbers, that stock was down 4% because the hydropower projects did not do that well. So on an overall basis, we had seen some sharp reactions. Also, Angel Broking, which is Angel One now, that stock was down 7% after we had the National Stock Exchange, which has disallowed the company from onboarding new clients. So that stock was also under pressure, and on the back of news, we had all of these stock reactions.
Well, those were some of the stock reactions on the mid-cap end of the markets. But, with that, let's take a look at all the stocks that are on our radar this afternoon, starting with Bandhan Bank. One stock that has not participated in the rally, in fact, on a 6-month basis, that stock is down somewhere around 10% or thereabouts. Today as well, it was down somewhere around 3% or so. Numbers weren't all that great. The first quarter numbers, net profit was down somewhere around 19% on a YY basis. In fact, asset quality metrics were also pretty weak, and there was stress in the MFI segment, which is why I think a lot of these brokerages have cut their target price on the stock. Some of them have also reduced the EPS forecast on the stock as well. So if you look at Nomura, it has a buy rating. Target has been cut to 270 from 325. You have Nomura cutting the FY24 to FY26 EPS estimates by somewhere around 11 to 14%. That's a steep cut coming in. Jefferies has a buy rating, but has cut the target price to 280 rupees. So a lot of these brokerages have cut the target price to below 300 rupees for this stock. And but Jefferies expects the NII growth and loan growth to kick in from the second quarter onwards. CLSA also has cut the target price to 290. In fact, it has revised the FY24 to FY26 earnings estimates by 3 to 6%, revised it downwards, so to say. Management was on CNBC TV 18 today. Now they expect the MFI book to pick up pace from the second quarter and to see a recovery from the festive season onwards. They say that MFI book stress was largely seasonal in nature. In fact, the ECLGS loans of somewhere around 583 crore rupees have been included in slippages, and they were already declared as stress. So slippages are in fact rather expected to decline in the coming quarters. So that's what the management has said, and it also believes that the CASA ratio will improve to 40% in FY24 from 36% currently in the first quarter. If you look at the stock, it has the recovery for the business for Bandhan Bank has been pretty slow compared to other banks from the pre-pandemic levels. And as I was mentioning, on a 6-month basis, the stock is down 10% vis-a-vis the Nifty, which is up somewhere around 8% on a YTD basis, right? And in the June quarter, FIIs have increased their holding in the counter, but DIIs, the domestic MFs, have reduced their stake. But a lot depends on how the MFI segment recovery plays out from here, and all the other commentary coming in from management. It's upbeat. They expect some bit of recovery to kick in from the festive season. We'll have to see how things pan out from here, and only then maybe there will be some bit of respite for the stock prices going forward.
So yes, Bandhan Bank closed almost at the day's low, but what closed at the day's high was HDFC Bank. Now, if you look at the quarterly numbers, they were quite satisfactory. In fact, the company posted a very stable set of earnings, and the results were in line with the street expectations. Now, the company also posted their shareholding pattern on Friday, which is 3 days back, and we had the FI headroom, which stood at nearly 14%. Given the fact that it is more than the requirement of FTSE indices, in the upcoming August review and the September rebalancing, we could see some strong inflows to the tune of $1.3 billion for HDFC Bank. Obviously, these are passive flows, and these have been estimated by the Nuvama quant analyst. But yes, there are flows which come in for HDFC Bank. Now, apart from the results, Jefferies sees a target of 2,100 rupees on the stock, simply for the reason that it's a very large global bank, can be compared to very large size organizations globally. The mobilization of deposits also should drive growth for HDFC Bank in the coming quarters. In fact, we have Jefferies, which estimates a 17% earnings CAGR for the bank, with a return on equity of nearly 16%. And if these return ratios remain healthy, Jefferies believes that there could be some good outperformance from the share price of HDFC Bank. Obviously, post the market hours around 5 p.m., we have the management of HDFC Bank, which will be hosting the first ever conference call post the merger. And obviously, apart from the earnings, the strategy to drive growth, the strategy to really kick out the synergies from the merger of HDFC Bank and HDFC are the important monitorables in today's conference call. So, quite exciting journey for HDFC Bank and HDFC. Let's see how the management really addresses the analyst in the conference call ahead.
All right, important to watch out for, of course, the commentary coming in from HDFC Bank on the merger synergies. Numbers, of course, were steady, and of course, we saw the stock reaction coming in as well. On that note, the next stock on my radar is DMart, Avenue Supermarts. Of course, numbers weren't all that great. The profit growth was of course muted, somewhere around 2% or thereabouts on a YY basis, but it's the lower operating margins that have hurt the company's earnings once again. Last quarter, remember, the margins were a concern, and they had contracted, and this quarter once again we have seen a contraction in gross margins by about 110 basis points. Revenues though were pretty good, 18% on a YY basis. Important to point out that in the last quarter the company opened just about 3 stores, and despite that it has clocked an 18% revenue growth. That means the same store sales growth has been pretty good for this company. If you look at some of the brokerage reports, Jefferies has a hold rating, target price of 3,700. It believes that the general merchandising and apparel mix has driven the margin decline. We'll come to that. Let me also talk about Morgan Stanley. It has an equal weight rating, target at 3,786 rupees a share. Now, if you talk about the gross, the general merchandising and apparel segment, well, there's a lot of competition on that front coming in from the likes of Zudio, Max, etc. Even though it's a high margin accretive business for DMart, there's a lack of demand there due to intense competition, which is why margins have taken a hit for DMart. And I was talking to Nirav Karkera of Wisdom in the morning regarding the prospects of the stock going forward. He said there is a limited scope for much surprise on the upside and downside, any downside going forward. So if you are a long-term investor, he advises investors to stay put in the stock, and it can be a good play on the retail and FMCG front. But when it comes to the gross merchandising and apparel business, we'll have to see how it kind of manages to tackle the competition coming in from other players. And he believes that the growth trajectory for the company will remain flattish going forward. If you look at the stock price, Yatin, the stock had managed to cross that 4,000 rupees mark very briefly in the past, but that fizzled out, and we are once again around that 3,700 mark, which is where most brokerages have pegged their target price going forward. Absolutely. So we'll have to see how things move on for DMart, going forward when it comes to the margins, and whether it sees any kind of recovery going forward or not.
Absolutely, and with that, it's almost record highs for the markets. Irrespective of stocks, we have seen strong 52-week high ratio, which is coming in for the mid caps as well. So let's hope that this rally continues and 20,000 on Nifty appears in the month of July itself, because the monsoon have been kind so far, and overall the state of the economy has been quite strong. So we have fundamentals which are supporting the rally. Right. Let's see whether or not we hit the 20,000 mark. But next time, Yatin, be sure that you get your miniature bull out, and we'll have a nice discussion around that as well. But yeah, with that, I think we've come to the end of this edition of Closing Bell. Of course, if you have any comments, send them in to us in the comment section below. We'll take note of them. But for now, it's a goodbye from me and Yatin. It's record highs on the Lal Street. Let's hope the momentum continues tomorrow as well, as we have a barrage of earnings to watch out for this week. It's a goodbye from me and Yatin. Thanks a lot for watching. Stay tuned for Moneycontrol for all your other news and financial updates.